This week, the banking industry faces some uncertain times ahead. Media Prima continues to embark on efforts to survive the structural decline of traditional media, but it wasn't all bad news because Zoom crushed expectations in its recent earnings announcement. The banking sector, unsurprisingly, is a major casualty of COVID-19, seeing as it is a barometer of the general economy. That was clear from the slew of earnings from the listed banks. Most of them saw sharp quarter-on-quarter and year-on-year declines in net profit. None of the banks, and I repeat, none of the banks except Hong Leong Bank declared a dividend, which is a break from historical trends. But this was not all too surprising, since banks not only in Malaysia, but even in the US took opportunity to set aside capital for that rainy day. Aside from a slowdown in loans growth, banking net interest margins came under pressure. This is on the back of Bank Negara's steepest overnight policy rate cut this year of 50 bips to 1.75%. So while loans get cheaper for you and me, this is not so good for the banks. Plus, banks had to incur a one-off modification loss in this quarter because of the loan moratorium which ends this month. So the next big thing to watch out for is what happens in October when Malaysians have to start paying their loans. Will the end of this 6-month relief mean closure for businesses, and with that, unfortunately, job losses? And what happens to those who have had pay cuts or lost their jobs? Will asset quality at the banks deteriorate? And more importantly, what wider implications will this have on the broader economy? It's hard to gauge the full impact of this because target moratoriums will still be available for selected groups. Another industry that has been facing tough times is traditional media. It had been facing pressure to transform long before COVID-19, which is why Media Prima has been undertaking a transformation plan and diversifying into e-commerce. Now clearly the venture is taking off because it has just increased its stake in home shopping company CJ Wow Shop from 51% to 100%. And in fact, CJ Wow Shop, originally a Korean home shopping operator, contributed over 230 million ringgit to Media Prima's revenue last year. It also posted a net profit of 6.3 million ringgit for the first half of 2020, with revenue growth of above 30%. So, could this be what helps turn the company around after continual losses since 2016, especially since advertising revenue is not set to improve in the near future? But one company that has been spared from the doom and gloom of COVID-19 though has been Zoom, with some of us even complaining of Zoom fatigue. But the revenue of this company is far from tired, as revenue surged more than 4 times in the second quarter to over $663 million, surpassing analysts' projections. Its monthly users increased by 4,700% year-on-year, as work from home became a reality for many of us. But the figure to watch is the number of business customers. Meanwhile, the company, like all tech players from Netflix to Apple, is looking to grow its international operations. And finally, in the US last night, markets corrected very sharply with big tech stocks leading the plunge. Shares of Tesla, Apple and Amazon, which have been rallying for months, contributed to this 5% decline on Nasdaq. So the big question we leave you with is, have valuations peaked?